And welcome to the Market Alert for Tuesday the 18th of August 2015. Starting off in the 5-minute chart, you can see in the pre-official session there, the market trading down 100 points and 50 points being in the first bar of the session. The market then found some support, which you can see there with testing, and then a couple of professional selling bars, and then followed by a professional buying bar coming into the market and holding this market at the 17,350 level. So price is holding here, and if we just get the markup tool, click on here, trading all the way through the 17,400 level and then all the way through the 450 level before coming back down to this level and just closing below it there. Again, the indication here is that we should collect profits as the market's showing some weakness. We've got a couple of upthrusts there as well. So that's precisely what we do, and that's around 77 points on this trade. The market then closes back above, and as I've said, in the short term the market's to the buy side because of the recent down move, and there we see the market moving again on for another 40 points on this one as well. So over 100 points in the first couple of hours yesterday. In the afternoon or evening session, afternoon New York, evening UK, the market puts in sell signal. Got a triple top there. You see prices trading down, but failing to move any lower, and then again it's sideways basically, and this is why I've not traded the evening session for some time, simply because the market is not doing an awful lot in the evening part of the session, afternoon at New York. The market's gone up on absolutely nothing. It's what's known as levitation. As far as I can see, there's just no chance of this market maintaining this. And even if you look at the daily chart, you can see it's dropped off markedly. There was more selling in the, or more volume in the downside than there has been in this turn back towards the highs there. And the market's starting to look a bit weak as well. What's also interesting about this is the crude oil market. If I can find a chart for you. Let's just see if we can find one. There we go. There's the daily chart of crude oil, and you can see we've got a new low for yesterday as well, down the $42 per barrel level. Now normally what you would expect to see is crude oil rising with the underlying market, because as I've said before, if the economy is doing well, then crude oil should be doing well. But crude oil is telling us that we're heading for another recession, global recession in fact, based upon the Chinese devaluing the yuan last week. So again, what they sort of delayed reaction really, I suppose. In the next couple of months you'll see this coming towards the western side of the markets, and prices going south because there is no recovery. It's nothing but an illusion. QE was a complete and utter waste of time and just a big experiment. So I'll be talking about this more as we head in towards September, but at the moment the markets are being moved around and levitated by the I wouldn't be surprised if the Federal Reserve aren't involved, to be perfectly honest with you. They've been manipulating the markets now for the last 6 or 7 years with their QE. There is no free market anymore. There's no free market in China either. There are stipulations in place that now govern what you can actually do in the market. So that's not a free market either. You know, you can't sell short. You can't hold more than 5% in any one particular company. Brokerage firms have to buy. They're not allowed to sell. I mean, the whole thing's ridiculous. But eventually, the free market will have its day, and when it does, it is going to be momentous. That's without a doubt. It's going to be the biggest correction you will have seen in the history of the financial markets, because there are so many bubbles, and the biggest asset bubble is the debt bubble, the bond market, and these are all looking very, very precarious at the moment. So this is why Yellen and co at the Fed are vacillating when it comes to raising of interest rates. Carney backtracked last week in the UK as well. And speaking of news, there's nothing today out at 3 p.m. There's a bit of news beforehand at 1:30. Housing starts and building permits. That's about all for news. And then finally, the implied volatility 12.25. Again, we're in this tight range here, even though there's a lot of volatility in the underlying market. The big swings in the implied volatility have vanished, which is very, very eerie and quite strange. So let's see how this unfolds over the next few days and weeks as the traders come back off their holes and the children return back to school when things get back to normal, sort of the first or second week of September. Right, that's it from me for this morning. I'll see you in tomorrow's edition of the Market Alert. As ever, thanks for watching, and see you in the next one.